Hello guys, so welcome back. Let's continue with this discussion. So right now I want us to look at what is called weekly profile, a concept that is originating mostly from the ICT trading community. So it was coined by ICT and his followers. The reason why I say followers is because ICT, people who trade ICT, sometimes they can be weird, but that is not my point today. So there is this concept which is a very nice concept, which is weekly profile, and it comes from the previous things we've done called CRT. So basically, the market ICT guys are trying to identify uh, patterns in the weekly chart where they'll be able to spot AMD cycle. If you can remember, I discussed with you AMD cycle. So AMD cycle is very important for identifying where the market is going to, which day of the week. That is why it's called weekly profile. You identify throughout the week which day of the week is the market going to accumulate, manipulate, and distribute. So what they are interested in as ICT people trading a weekly profile is they are not interested in the accumulation. They are interested more so in also after the manipulation. They are interested in the manipulation. After seeing manipulation, like I always do, even from the strategy I'm trading, which is the same thing that I just simplified. They now trade distribution, and that is exactly what I trade to distribution. Distribution. So distribution. So they go to the weekly time frame and try and spot which day of the week is going to have a manipulation. After manipulation, they look for entry. So mostly they don't trade during Monday. If you're trading a weekly profile that I've already traded at some point, I was trading weekly profile. I was using it to do what is called top-down analysis. Actually, weekly profile is used for top-down analysis, and I'll be discussing that in the next 2 to 3 videos, different ways in which you can do top-down analysis. Top-down analysis. So that is how the weekly profile came to be. So people prepare on Sunday, and they project how the market should look at before they take their trades, and they always project it on a daily basis. So they try and identify the CRT zones that the week can react to, especially on the daily time frame, but everything starts from the weekly. So how do they do that? And before we do that, make sure you read the scam notice here. We don't do investments, and we don't do any other form of shady deals. Now, by definition, what is the weekly profile? So ICT's weekly profiles are conceptual frameworks designed to illustrate common patterns or price behavior observed during a trading week. This profile help ICT traders to analyze and anticipate potential market movements based on historical tendency and recurring patterns. That was written by TradingView itself. So TradingView receives a lot of indicators and ICT concepts, and that is why they're able to come up with such beautiful definition. So how do they anticipate that? What is important is this part called the week. The week. They try to identify, if you're trading weekly profile, you will have to try and identify where you are going to see the weeks. After the weeks, that is when you step in into the entries. So they start by looking at the previous week's price direction. So they try and look at the previous week direction. So if last week was bearish, they expect that this next week should be bearish, and therefore, what is the liquidity target? The liquidity target is that this high should go. So they expect that that high should go. So the market should come, take this high, and even trade below here. So how will they trade it? They know that this is the next liquidity point that the market should be targeting, and therefore they are expecting that. Actually, I've not drawn nicely these patterns of mine, so you will bear with me a little bit as I explain them. they expect that the next trading direction is the lows of the previous week, the lows of the previous week. So the market opens, actually the market should be opening around this place here. Yeah, the market should be opening at the previous week's close, or just some slight jump, which is normal. So that they know that the market should be going down, and therefore what they are expecting is that they are expecting to see the price first of all go and do what is called manipulation. How do they know that? They look for this week here. It can be on any day, so they'll start Monday opens here, and they wait for either of the days to come to, let's say, 50 or 25% of this previous candle's whole direction. So if this is the whole candle, they expect that at least it should pull back to around 50%. After pulling to around 50%, that is when they start looking for the entry. Exactly what I do also, but on the daily time frame and on specific day I'm trading. Unless you're doing other forms of, let's say, if you're doing if I'll be teaching you my swing CRT trade the same way I trade on the daily, but now on the swing strategy. This is please don't forget this concept, because I want to go deep into it, because I've already explained here. So they'll be expecting a possible pullback, 50% pullback, and that 50% pullback will be the one giving this week. After this week is formed, then the next day they should expect the market to open and start rallying downward. That is when they look to get involved in the trade, and then they trade up to this market. So same to this, the market should open, and when the market opens, it should give us some form of manipulation. So this is how they expect it. But the market will open, and then it should pull to something about 50%. 50%. After 50% pull back, let's say this one now pull back this way. After this 50%, after pullback, that is when they'll shift to the following day, after they have only seen the 50% pullback, or sometimes 25. It depends with the weekly profile you pullback percentage you are willing to take. So after seeing one of the days pullback, it can be Monday, it can be Tuesday, it can be, but what is important is that they trade from Tuesday to Friday, not from Monday. From Monday is just identifying where the market wants to move. So once they see at least 50% pullback, either on Monday or on Tuesday, then on Wednesday, they expect that the market should open, and immediately from New York, from Asia session, should start dropping, so that they can catch in the sales in London and ride the market until Friday, when they'll now close out most of their position on Thursday, because on Friday, this is what happens. The market takes liquidity, external liquidity, or taps onto fair value gaps that were left some weeks ago or months ago, and then this is what happens. It reverses inwards, leaving this week here. So you need to take your positions and leave the market. That is the same thing, but this other side too. So the market opens, and after the market opens, you expect that you get some form of pullback, and the pullback is the one doing manipulation. So you don't know when it is going to accumulate, but what you are sure is that you want to see manipulation, and manipulation only comes when you see at least some form of 50% pullback. After some 50% pullback, it can even go up to 80. So you are open to that. Then after seeing this pullback, let's say 80%, the following day you expect that the market to open and should immediately start buying, causing change in state of delivery or change of characters. Maybe you can be using 1 hour or 30 minutes to see that the market is strongly rallying, like what I'm going to show you today. Actually, this is the following day. If you're watching video 30, this is the following day. And I'm even going to show you the yesterday's trade. Don't worry, I'm going to show you how it went. It was a very beautiful trade, and so far no loss for the last 2 weeks. So I'm happy on what is on the strategy I'm trading. Doesn't mean that I won't get losses. My win rate is just about 50 to 40%. So I expect that at some point I can even take 6 losses in a row. 1 loss, 2 loss, 3 loss, 4 loss, 5 loss. But I'm very confident that if I just get 3 wins and then with maintaining the same risk, I will still be net positive. So after they have seen this pullback down here, they expect that the day they are trading, the day should begin by rallying in the opposite direction, confirming that now the week is forming now. It's week. This week is now being formed. When market move trade up to this point and then now start reversing, that is week being formed. So they will look for their trading after change in state of delivery, and then they can keep up the week. Same to this here. Same to this here. They expect that since the market closed bullish, the next liquidity point is this point. The market should be taking this, but before it does that, preferably it should start by pulling back 50% before it can take this liquidity, because the market just follows the next liquidity point. So after identifying about if the market is so big like this, maybe somebody will take it at let's say 40% around this 0.6 something. I've just inversed this thing, so let me reverse it well. So the market has moved from this point to this point. So they expect that from next week we should see some 40% pullback, and then we start seeing the weeks, and when market trades above this, now it means that it won't come back this side, and therefore you look to take your trade. So the manipulation happens just like I've shown here. The market opens, ranges a little bit on Monday or on Tuesday, and then on Wednesday you see this week being formed, and then on Thursday is heavy rallying until Friday, and then it will close with small week. Same here. Monday opens, you see either pullback on Monday, Tuesday, or Wednesday, or even Thursday. And then on Friday, it is just one candle that takes everything. So I don't normally trade it, but it is something that you need to take note of, because my strategies are derived from this kind of trading style. It's only that I've summarized it and I've made it easier for you, so that you know that at some point I was following all these things, and then I decided that what if I just come up with a mechanical way of identifying this thing without the struggle. Why am I saying the struggle? Look at this. This is how you need to be studying your week. Now this is what is called weekly profile. So each bar there represents a day. So let's start with so we have like 4 weekly profile. This is 1, 2, 3, 4, 5, 6. 6 weekly profile analysis that you need to know. So they are too much, and that is why I decided that I'm not going to study all of them. What I'll be waiting for is that a simplified summary that I've shown you. So for example, they are called with different names. I don't care about their names, but just get to know it the way it is. So for people who like reading, you can also read, pause and read. So the first one is called Classic Tuesday, low of the week. So Tuesday forms the low of the week. So Monday opens, Tuesday trades low, and then Wednesday you open the charts and the market is already trading in the direction you want it. That is, the previous week was bullish, so you expect the following week to be bullish. So you see Wednesday is when you start trading now, because you've seen the low, the price has already made its week on the weekly time frame. So you see Wednesday you trade, Thursday you trade, Wednesday, this Friday you can see it has formed again another week. This is the high of the week, and this is the week, and then this is the low of the week. Classic Tuesday high of the week if we are bearish. So it is Tuesday that will do manipulation, and then the rest of the days you trade Wednesday and Thursday. Friday you relax. Now there is a consolidation Thursday where the market consolidates, and then on Thursday it raids everything, and then on Friday you see this big bullish candle. That is if the previous week was bullish. If the previous week was bearish, this is just a bearish reversal. Thursday reversal. So cramming these things became so futile that I could not cram all of them, and therefore that is how I decided to make the system mechanical, and I only look for weak formation. The day the weak formation forms, that is when you start trading. So we have consolidation, Thursday reversal, then we have Wednesday weekly reversal, where Wednesday is the one that manipulate. Wednesday reversal, this is for bullish and this is for bearish, provided Wednesday has already manipulated. And then there is this called Wednesday low of the week. Wednesday forms low, the rest of the week uh, is trading higher. Wednesday forms high of the week, the rest of the week trades lower. So this, when I say forms high or low of the week, that is forming the week of the week. I don't know if that makes sense. The week of the week, consolidation midweek, rally. This is so much. This is so much to learn. So I would advocate that. Of course, I know them, yes, but to me, sometimes I hate when there is too much information, and I'll discuss that in the future video that you are watching here, maybe 3 to 5 videos from now, of the curse of knowing so much in forex trading. So I don't want you to fall into the curse I fell into by knowing so much. You will think that knowing so much is good, but knowing so much is so bad. But I'll explain that in the later video. So there's the last one, which is seek and destroy, bullish Friday, and then where the rest of the week was just manipulated on Thursday, and then the rest of the week by the rest of the day by Thursday, manipulated everything. After Monday, Tuesday, Wednesday were just ranging. Then we buy. So if you want to read these things and even take notes, clearly I've shown you there. You can also zoom in. You can also zoom in and watch them for yourself. You can read everything here. It's already been explained by this particular trader. This one is some of the things that I copied myself. Of course, I found them online, but I read it. I read the summary, and that is how I knew about these things. And then I practiced, studied it for some times. It was so much stressful for me. I could not keep up. But if you can keep up, well and good. Be my guest. So let's go back to the chart and check some few things here and there before we wind up the discussion. So with that, let me show you the yesterday's trade. Now this is the yesterday trade. If you are very keen, my entry was supposed to be here, and look at that. That was 1 to 8 risk to reward that played out. This is where my entry was. If you are very keen, I had 2 orders. I wanted to take 2 orders. One was at about this 50% there, 50%, stop loss there, take profit. I showed you to be somewhere 1 to 4, and I considered it so big that I didn't take it. So I opted to go with this here, which take profit in less than how many candles. So let's delete this one first. So how many candles? If it was to hit profit, this would have been 1, 2, 3, 15 minutes, and I'm already out. 1 to 4 is to reward, even before this session opened. Why? Because what I was banking on yesterday is that the market will pull back and form the wick, and the wick will tap me here, and then it will go and expand throughout the day. Unfortunately, that one did not happen, and so my trade alert was not triggered. Another thing is, so I missed the trade, in other words. Another thing is, I wanted to take it. If you can remember the previous video, I was deleting the order that was supposed to be here, because I considered that the take profit is going to be bigger, and so just out of stupidity, I also make mistakes and I miss trades like this. So even if I thought it was going to be bigger, you can see it has even gone for more than 1 to 6 risk to reward, even if I took it nearly 1 to 6 risk to reward. So that was so massive. Now another thing is that on the checklist I provide everything here, and I explain clearly that I like taking trades at fair value gap open. And then if you check the previous videos, I said that if you are taking trades on order block, prepare to miss trades, because most occasion orders market only tap fair value gaps and order flow. So if I took it on this order flow, on this fair value gap, at the open of this fair value gap, I would have been tapped in. Stop loss is about here, that is 30 pips stop loss. And let me see if I would have gotten my 1 to 4 risk to reward. Let's see. You can see, after all, I would have gotten my 1 to 4. So yesterday, I just sabotaged myself a little bit by waiting for uh, for order block tap. It's okay. So you don't need to trade. You don't need to catch every trade. Sometimes you will miss, because for the last like about 2 months plus, this market has really been pulling back to order block. So it is yesterday that I decided that it is not going to pull back to order block. And actually, I was awake by this time here that market started moving upward, and I thought of maybe taking market execution here. And then let me see if it would have hit my 1 to 4. Still, it would have hit my 1 to 4. So I didn't want to take that position, because now I'll be chasing trade, and that does not augur well with me. I'm past that level. So that is how I ended up missing this trade. Of course, I'll journal it, because that is a good trade that worked according to the strategy. The only problem is that I did not get tagged in, because I waited for it to form to come and tag in the order block. This is where my order was, and that is why I missed this entry, and it went. Now, when the market was forming this kind of pattern here, the market was not moving. It was choppy and consolidating. I was very happy, because I knew that this is liquidity that was being built. Now, I'll explain that later. If you see the market very choppy like this when it is coming to your entry, just mind, know that be confident that the market is going to tap you in and go your direction. Why? Because this is build up of liquidity. So with that in mind, what am I looking for today? Let me delete this. I'll journal it later, because that one worked. It is me who missed the trade, because I wanted to take it on order block, but it did not work through. And it is normal that at some point you will miss trade. You cannot catch every trade. So far, I'm net positive. I'm not worried, because uh, the trades I took, the trade I took on Monday is still netting me positive. So even if I miss trade, it doesn't matter. Now, there is this trade here today. Today is a sort of gambling day. Why? Because today Trump at 5 p.m. Kenyan time, he sent a tweet clearly indicating that he is up to again with the issues of sanction, and therefore it is now strongly affecting the market. So what am I looking for today? You can see the market is bullish. So I'm expecting it to continue just bullish, because it opened here and rallied massively to the high here. That is what I'm seeing. It rallied strongly, but now it is rejecting. It's not a guarantee if it will reject throughout, and then we see a reversal and a continuation of this bearish trend. It is not a guarantee. At the same time, this could have been just a sweep of this structural liquidity, and then the market is back to being bullish. Same thing, this is 50% of the leg. The market has already pulled back to 50% of this daily time frame, and therefore it could want to go to continue with this bearish momentum here, because of the Trump's tweets today. And that is why you see the market is crazily rejecting from above, because Trump is back to his tweets of tariffs, and it is not doing well with China and UAE. So that is why the dollar could start being weak, and the Japanese yen could start being strong, and that is why it will be pulling this thing down. No problem. So for me, I don't care so much. The only thing I know is that the market opened very bullish. The market opened very bullish. So I don't do all those analysis I've just told you. What I'm interested in is to mark the high and the low of the day. After marking the low and the high of the day, what I do is very simple. I look at if the market has already pulled back 50%. Now, by the time we are in this, the market clearly has already pulled past. This is where it went for the high. This is 50%, and this is now, it has pulled now to 50 below, even actually it is at 80-90%. So after marking the high of the day and knowing what the market has done, this is exactly what the market has done. And clearly it has even raided the high of the day. So that is just the low of the day. That is just more liquidity for me. So what I'll be doing is that clearly the market has been buying the whole day. A good part of the day the market is buying. So according to the strategy, I mark high of the day and decide what the market has done. So to me, the market was very bullish. I think it is that's the tweet that is making this thing to pull back heavy like this. So personally, I will still be looking for buys, and I don't mind being wrong because we could still be playing the CRT. Don't forget that we have weekly profile. So weekly profile, let's see. So the previous week was bearish. The previous week was bearish. So maybe this is the last manipulation point and then we start pulling back again here. Could be true because after all, we've taken liquidity from this candle's low here. Liquidity rate, the one I talked about in the previous video, CRT. You can see that this is a liquidity rate, but it has rated both sides. No problem. Now, there's this part here. I want you to check something here. Okay, so this is an example here. You could be thinking that the market now has raided the liquidity of this high, so it will only come back down, but that may not be the case. Same to here, it may not be the case. Same to again where I can't see more. Can't see more. Here it was also raiding, but it didn't. Here it traded down, went upward. So to me, I honestly don't care about all this analysis that I'm telling you because I normally don't check them. I just check the daily and the 1 hour. The daily I just used to mark the high of the day and the low of the day. So clearly, this market want to sell at the moment, but personally, I don't care. The strategy says I should be buying based on this move here. I should be buying. So let me see if I'll get entry. I have 1 more hour, 1.5 hours to come to the market and decide whether I will take trade or not. If I get entry, if I don't get entry, so what I'll be looking for is to get entry somewhere around this zone and push it this price to keep going upwards. So that is the game plan. So with that game plan, all I'll be looking for is to see market shift bullish, and then I'll buy. So for the weekly profile, let's check. Let me check something first. For the weekly profile, let's just go to 1 week and then I show you like for 2 weeks. So number one is that you check what the previous week did. For example, the previous week on this week here closed bearish, so let's check this week. So the next week you expect that the market to give you small week and then continue. So you go to the daily. Let's see what happens. The daily, what did it do? It came and it is Tuesday that manipulated. This is Monday. Monday continued that one, and then Tuesday now manipulated. You can see here it formed what is called a CRT, liquidated here. So this is the week. Then what did it do? It closed bearish. So from Wednesday, you are now sure that you can only look for sales. That is how CRT and weekly profile operates. So this is one of the strategies that I will teach you. So you need to master it, because after this CRT was formed here and this manipulation, and the daily is selling like this, you needed to for the swing strategy. After this CRT is formed, you mark this and you look to take your trade at 50% or at open. So if the market pulled back, you would have taken your entry. Then you target at least a 1 to 3, 1 to 4. You can see. So unfortunately, this one did not tag you in. So let's look for another week. So please start mastering that, because that is the swing strategy that I'm offering. You can see it is so simple. Let's go to another week. Now let's see this week here. This week here closed bullish, and therefore you need to buy the next week. So you wait for weekly profile and see how it is performing. So week 1 starts by going down, week 2 day 1 going down, day 2 going down. So this is the classic Wednesday reversal pattern. You don't need that. You just need to be following until you see your CRT. So this week we did not see any CRT because we would have expected this to be raided, then we get our entry. But from the weekly profile, you can see that we got this week formation, and then from this day here, if Tuesday and if Monday you didn't trade, you are trading weekly profile. Monday you did not trade, Tuesday we did not trade because the week started and maybe New York, London, by the time London came, it was still selling. But on Wednesday, look at what happens. If you go to, let's say, 1 hour, check from what happens from Wednesday. From Wednesday, 1 hour, Wednesday, you can see that the market opens and immediately we have what is called a change in state of delivery. How do you know? So on Tuesday, you can see the market opened, no change in state of delivery, because you would have said that this is the change in state of delivery. Nothing happened. Instead, it came back and changed state of delivery again here, even before London opens. London opens and immediately changes state of delivery, confirming that it is going to be bearish throughout. Again, it did not even attempt to change state of delivery in New York. That is Tuesday, so you don't trade. For people who trade weekly profile, so you wait. On Tuesday, on Wednesday, clearly it has formed. It has clearly changed state of delivery here. So all you need to do is to look for another area that it could be potentially looking to change state of delivery. Where is it? This last up close candle. So when the market comes to that, you take your entry. So on this close, maybe you can refine here. I don't know. It is personal. So stop loss there. And then you look to take trade up to Friday. Where is Friday? This is Wednesday, Thursday, Friday. You see, people who trade change in state of delivery. The people who trade weekly profile. I don't do that, but it's something that I'm going to teach you in a swing strategy. If you like it, you will trade it. Let's go to another week. I prepare you in advance on how I trade and then how I look at the market. So let's say that let's take this week and let's take this week that did not work and see. So the week closed bullish, so you expect it to keep going bullish. So let's go to the daily time frame. You don't trade on Monday. So you can see the Monday started by immediately going upwards, and then it started reversing. So you don't see any form of a lot of reversals. You don't see that, so you don't trade. Alternatively, for people who trade the people who trade weekly profile, they mostly like after this reversal that we discussed here, they will come and trade on Thursday, because on Thursday the market has clearly indicated that it is done pulling back. It has formed low of the week, so now it is back to being bullish, and you can see Thursday did that. Same here. If you are waiting for week of the week, this Monday you didn't trade. Tuesday the market comes back, you are waiting for the week of the week to form, because the market opened here. Actually the market pulled back, jumped here, open. It means that this week there was no trade. Let's go to another week, because it formed Monday manipulation and then the week reversed completely. Now let's go to another week. Let's say this week here. So Monday we are expecting to sell. So Monday starts by going upwards, which is nice. Tuesday closes downwards, confirming that we could have formed the high of the week. On Wednesday, that is when you look to trade. How do you look to trade? You go to 1 hour and start looking for change in state of delivery. So you go to 1 hour and look for change in state of delivery. So let me delete this, the things we discussed yesterday. So let's see 1 hour. You can see 1 hour opens and immediately we start going upwards, and then this is that day that opens. So after that you can see that the market is really going downward, so that means that you should keep going downward. So you look for the area for potential reversal. This is the area that we don't need to push past it. That would be change in state of delivery. So that is area you look to take your entry. around this zone. You can refine to lower time frames. Stop loss there. You can see it gave a 1 to 4. Then the next day, what did it do? It reversed completely. This is news. It reversed completely, but you've already ate your 1 to 4. You're just trading one day. So the next day, this after this reversal, the next day started again reversing downwards. You can see, and then this was on Thursday. So on Friday, you look to trade again. So on Friday, the market goes, and then it changed the state of delivery here. So if it changed state of delivery, you don't need to trade because it has already closed past that. Alternatively, you could still look to take entries here on a lower time frame, but as you can see, it now came back and closed inside because Fridays are never good for CIT trading. Let's go to another last week so that we can go to the next one. That is how people find weekly profiles. This week here, let's go to daily. Daily one, there's no pullback. It just keeps going down. No pullback. No pullback. Did not create high of the week, so no manipulation, no form of any serious pullback. So there's no trade. Personally, there's no trade here. This is Friday. There's no trade. Let's go to another week. Let's pick this week here. We are supposed to be selling because the previous week sold. You go to the daily. The reason why I'm giving you so many options is because I don't want you to. I want you to. I will not be repeating this concept when I'll be discussing. So Monday sells, Tuesday buys, correct. You start to create high of the week, which you need. Wednesday another high of the week. Thursday another high of the. It is Wednesday another high of the week. On Thursday it sells, confirming that the following day you can look for sales. So let's see if we get sales on Friday. That is how people trade weekly profile. Just one candle and that's it. You look for the day that it will give you that one candle, and that is when you trade. Or you can take early entries, but just know that that one you will be preparing for disaster. So on Friday that you are supposed to be trading, the market starts change states of delivery, going upward, another change state of delivery. So you don't see clearly that we don't have any change in state of delivery for bearish move. So you don't, there is no trade here because this is the last up close candle, no close here. Again, we have, this is the closest you had to change in state of delivery. So either you took it, stop loss here, you took a loss, maybe there was no entry again. So let's go to another week. Last week, so this is on Friday. Yeah, let's go to this week. This is the last one I'm doing. So we expect to buy. So Monday opens. We don't trade Monday. Monday makes the low of the week, nice. Therefore Tuesday buys, correct. Wednesday, now we can start to look for buys. So you can start looking for buys. If this is a strategy you like, don't worry, it is there in the swing option. You can trade it. So you can see you will only be getting 1 to 2 trades a week. So Monday, Wednesday opens, and immediately we start going upwards. So you come during New York, you come during London. During London, where was the potential entry? Entry was around this particular zone here. This is the last area that it should not cross. Did it pull back to it? No. So you wait. Again, you look for a stream of up close candle. This is where is it? You wait for pullback. This is the last zone that this market should not be crossing. So when it comes to around this zone, you can take your entry or go to lower time frame and find entry around this zone. You wait here, let it pull back. It should not take this low. So because this is the last up close candle, so you don't expect a change in state of delivery. So you can either enter on this candle, or you could have waited for the market to tap here, and then you take your entry, stop loss somewhere around this place, and you can see overnight you already made your 1 2 This is your entry. Could have taken your entry, and that is six. You take your entry, and within no minutes already you take profit. Or if you wanted to hold for long, you can hold for long. So this is something that I've traded. It's only that sometimes I get tired, and then I choose to just trade the strategy that I'm currently trading. But this is also one of my strategies that I do trade for day trading, and also if I want to swing. But this, you will have to use multiple pairs so that you can find clearly the manipulation of the week and the manipulation of the day. So maybe I can just add you two more, because I won't repeat this concept again. I will only tell you that you can use it. So maybe we can try another pair. Let's check Euro JPY. No, let's check Euro USD. So like in this case, this week we were supposed to look for buys because last week was buying. So you go to the daily time frame. You don't trade on Monday. So on Monday, the market starts by buying. You have no business looking at Monday. So Tuesday, you wait to see there's no low of the week formed. So this is starting to form low of the week, another low of the week. So it is only today that the market is buying. So potentially tomorrow you can now buy. Let's look for another week. So let's say this week here we were supposed to sell. So let's go to the daily time frame. Where were we supposed to sell? Tuesday, no trade, no trade, no trade on Friday, on Thursday. So it's only on Friday that you're supposed to trade. Let's see if we got changes in status of deliveries. So you can see Friday opened, and you can see the market has started rallying upwards with no closure on changes in status of delivery. You can clearly see. So no trade. So there was no close on this so that it can go downward. Nothing like that. You'd have waited for it to close downwards, and then you wait for pullback. No closure. So this also, there was no closure down here. You could have waited for this market to close down here. After this down here, you take your trade entries at the top here. At the top here, you wait for pullback, and then you take your sells here. But this would have been late, very, very late. So definitely you didn't get trades on this day. There's the good thing about CRT is that you don't need to be getting trades every day. What you need to do is to look at changes in state of delivery. That is what you need to master in 1 hour, and then you master your weekly and daily profiles. You don't need to cram that table I showed you. So let's look at this day. If we got trade, you're supposed to sell. So Monday starts by selling, so you relax. Tuesday buys, nice. Wednesday, it takes the high, confirming that now you could have formed the high of the week here. So you can look for take trades on Thursday. So with this strategy, you will take very less trades, and similarly, you need to accept that, and you will trade a little bit of multiple pairs. So let's look at this. So Monday, Friday, Thursday starts by pulling backwards. It is trying to reverse. So this is just up close candle, up close candle. So this is, you start monitoring when London opens. Start monitoring change in states of delivery. So where is the last up close buy candle here? Did we pull back? No. So where is the last one again? Should to me, I always prefer that they should be at least two. So where did we last close? So this is, so clearly there is no better entry here. The closest it came to be was when this candle here closed below this, or you can even say it closed below this here. And when it closed below this, you look to take your entry at the extreme end of that close. Where was this extreme end? This was the extreme end. And with that, actually it is this, you can take one, but I prefer two, at least two candles. So with that change in state of delivery here, you could look to see the origin. Where is the origin? This is why the market should not be closing above this zone. So that is when you should be looking to take your trade. Stop loss, you can give it protected one here. So you can see the way the market moved. Did it give you anything 1 to 4? Clearly it gave you 1 to 4, but this was now on Friday. It came back on Friday. You could have added more entry. So Monday, Friday, this is up close candle, no change in state of delivery. Again, we sell, we change state of delivery upward, and then on Friday we change state of delivery when this candle closed here. After that, you try and trace the origin of this whole thing here. The origin is here, but then again we get another candle here that closed upward. So where is it changed instead of delivery? Yeah, when this market closed. Unfortunately, it closed and the day was over. So maybe if you took if you wanted to take entry on this tap or another re-entry, unfortunately you didn't get that, so you ended up with one trade only. So you can see the way trading ICT without looking at this chart here that was voluminous can work for you. So this is a strategy that I do trade sometimes, but not so much, but it's something that works very, very well. This is on another week. So we are supposed to sell because the previous week was selling. So you go to the daily. Monday, you don't trade. Monday, you don't trade. So, oh, my network is interfering with this process. So with that, I think we can just see you in the next video. I'm going to create another set of this kind of back tests to show you so many options of how you can trade the CRT, especially on weekly profiles. So I'll see you in the next one after I fixed my internet.